Thank you, Kelly. Yeah, one of the few stocks, of course, that is up today in this very broad and nasty market sell-off we're watching this morning. This not specifically related, though, to the deal, of course, which has resulted in Grubhub shares being up roughly 5%. What we can tell you now is just a few moments ago, learned that a lawsuit has been filed by Yum Brands against Grubhub in New York State Supreme Court. And it's specific to an agreement between the two companies that was signed back, I believe, in 2018. It was a partnership with Grubhub. This is Yum, on behalf of all of its franchises, of course. We're talking Pizza Hut, Taco Bell, in which it allowed for delivery. Apparently, last week, Grubhub terminated this agreement last Friday in a letter that was sent to Yum. And Yum is saying that that was a breach of a contract that they had. This master services agreement that they had entered into in 2018. By the way, part of that, Yum invested $200 million, so they own about 3% or so of Grubhub. They also had a director appointed to the company's board, so they expanded the board from 9 to 10. So not an unimportant partnership here that apparently is blowing up, again, with Grubhub having unilaterally removed itself from the partnership on Friday, and now Yum coming back and suing them and saying, you couldn't do that, you shouldn't have done that. We want to get an injunction, of course, against it. And apparently there was a mechanism by which they could have negotiated for new terms under the agreement, Kelly. So interesting, of course, in light of the deal itself, which we've been talking about through the course of yesterday and today, and one of the few stocks, of course, as well, that is up. So I did want to share that with our viewers at this point. Very much unclear whether it will have an impact on the deal itself, but certainly two big companies that are now going to be engaged in litigation.
David, what does it tell you about how the Grubhub process has played out overall, especially at a time when you could say these were hot stocks because of the pandemic, delivery became a really important option. I don't know how that played into it, but you know, what started out as a possible tie-up between Uber and Grubhub now has kind of Grubhub partnering with a European company and being sued. I mean, it doesn't, you know, I'm just curious what you make of that.
Yeah, well, I don't, it's very early here. I've got to read through this entire lawsuit. I'm not clear the connection between necessarily them pursuing the deal and deciding to unilaterally withdraw from this agreement, this partnership agreement that they had with Yum. But of course, as we've detailed over these last few weeks, Kelly, the back and forth between Uber did not come down to price, where they had an agreement, although Matt Maloney disagreeing a bit on that, but I'm pretty confident that's the case. It came down to concerns about antitrust, given these are two large competitors, and in fact, almost the only two competitors in a couple of key markets, New York, Boston, for example. Concern well-founded on the part of Grubhub that the union might get challenged, perhaps by federal regulators at the Department of Justice or even on the ground in cities and municipalities. And so they wanted assurances if they moved ahead. They couldn't get what they wanted from Uber. They attracted interest from other parties. But what's even more interesting, perhaps, Kelly, is you've got a company now moving in from abroad, but it doesn't narrow the competitive landscape. In fact, it only brings even deeper pockets into this area, which probably means even more fighting over price and could make things even more difficult for the likes of Uber Eats, which already loses money here, DoorDash, which is still planning on going public, and obviously now Grubhub with its deep-pocketed European owner. So we'll be watching it closely.